Following presentation is intended for financial advisors only. This event may include statements, forward-looking information, and such statements subject to risks and uncertainties, some of which are significant in scope and by their nature beyond the controls of the investment advisor. There can be no assurance such information will prove to be accurate, and results are not necessarily indicative of future performance.
Greetings. I'm Mike Hurley, Chief Market Strategist for NexPoint with your Market Minute for Monday, July 12th, 2021. Well, important last week was the same thing we chatted about the week before, which was the FANG rally. We just decided to show it to you this week instead of just talk about it. If you look to the right, you can see all 6 of the FANG stocks or the FANG M stocks, including Apple, Microsoft, Amazon, Google, Facebook, and Netflix, sorted by market cap. 4 of the 6 moved to new highs last week, and particularly strong were Amazon and Apple. You can see Apple's at a new high and has been strong for 2 weeks, while Amazon has blasted off dramatically to new high level as well. This is creating a slight divergence in the market, meaning the broad market averages are being driven higher by those large cap growth stocks. And that heightens the risk, we believe, of a potential consolidation or correction in stocks. We're still in a long-term bull market, or at least we believe so, but one that could see some consolidation or further rotation going forward. Stepping back and looking at the big picture, you can see commodities remain rock solid in a strong uptrend from last year. The 10-year US Treasury had been in an uptrend, but is potentially reversing that now. And I say potentially. This break of the 140 area is important, but you have held the 40-week moving average. And it's starting to take what we think is the potential for a bear trap or a fake out instead of a breakout. Specifically, if you look at the 10-year Treasury, it's highly dependent upon commodity prices, which remain strong, as well as credit spreads, which remain benign. So again, we're not ready to stick a fork in Treasuries just quite yet. As for stocks, you can see the uptrend in the market as measured by the S&P, the NASDAQ, the Dow, and the Russell. Market internals remain stronger and more supportive on the New York Stock Exchange, whereas on the NASDAQ, they remain a bit iffy. As the NASDAQ has broken out of this triangle consolidation, you've seen the advanced decline line or breadth not yet make a new high, and you're seeing a definite divergence in the number of new 52-week highs. So again, a breakout in the NASDAQ that has yet to be confirmed by market internals. Looking at the Dow and the Russell, you can also see the similar situation where the Dow is near a new all-time high, which focuses on those larger cap stocks, whereas the small cap Russell is acting a little bit weaker and having trouble closing up at new high areas. I've been Mike Hurley with your Market Minute for July 12th, 2021. I hope to see you again next week.